I'm Brendan Urich, the CEO of Electric Royalties, a young royalty company focused exclusively on the entire suite of metals really required for the transition of clean energy as the world moves towards a decarbonized global economy. We've got 18 royalties to date, and we have a cash flowing producing royalty, our zinc royalty in the US. We've got a heavy weighting towards lithium, but diversified really across the entire clean energy metal space.
Brendan, thank you very much for the introduction. Nice to meet you. We haven't met before, but I'm interested to find out more about Electric Royalties over the next short while.
Thanks for having me. Look forward to it.
So Electric Royalties have been around for a couple of years, 18 royalties already in the portfolio, one of which is a paying one. It's on zinc, isn't it? Which is, I always think of it as the kind of the forgotten transition metal because it's absolutely going to be core to that complex, but it's not the most sexy, the flashiest, but it's certainly a key metal. So tell me a little bit about that.
Yeah, well, zinc's, it's funny, right? Zinc's a big material. I think annual demand's around 12 million tons a year. So we are using a lot of zinc already in the world. It will play a big role in terms of especially renewable energy technologies. When you talk about wind galvanizing that steel, that's a very big component. But yeah, it's interesting. I mean, it is. It's kind of like copper's unloved cousin, But I've had zinc clients in the past. So for every 10 investors in copper, you might have one that's interested in zinc. But the number of people out there that really understand the zinc space and the supply side, I think the supply side in zinc is much more worrisome than copper. And I'm pretty worried about copper. So it's definitely a lesser known metal, but very interesting. Our royalty is on the Clarksville, Gordonsville mines there in mid-Tennessee. It's called the Mid-Tennessee Zinc Mine. It's really a complex. And it's owned by Trafigura. They took it over from Nearstar. Nearstar basically, going under a couple of years ago, not very well capitalized. So, exciting to have a group like Trafigura coming in. But that mine is actually vertically integrated with the Clarksville smelter. Now, that's the only primary zinc producer in the US, which is kind of crazy, for metal that is that kind of critical to have only kind of one primary zinc producer in all of the US. I think is a little bit scary. And that's one of the more, I would say, more well-known metals of the ones that we're targeting. So, and that mine, yeah, go ahead.
Remind me what you've got it's a sliding scale royalty. And it's the zinc, when the zinc price is over $1.10, you get 1.4%. Is that correct?
Yes. Yeah. And if it was below, in between 90 cents and $1.10, it's a 1% royalty, and it doesn't pay out below 90 cents. But the thing I liked about this one was they never put anything in there for inflation. And so it's not a contract where that price range is never going to increase. And then, I think if you look at where prices are going, they're about $1.60 right now. When we did that deal, they're already up kind of 25–30%. So, we put it at a pretty low risk that we'd ever have in any extended periods, where the royalty would not be paying.
And do you, that 1.4%, because it's above $1.10 per pound zinc, is that wholly owned? Do you get 100% of that 1.4%?
Yeah. So in order to get that deal done, I mean, it's a big royalty, right? The transaction size was about 17.5 million. We did get another royalty as kind of part of that package deal, but we had to bring in Sprott, royalty and streaming, to basically co-invest alongside of us. And so they put up pretty much 100% of the cash, $13.5 million to close on that deal. And, the reason why we did that was, well, we didn't really have the cash. We could have probably tried to go raise the money, but we didn't want to go all in on one asset. I mean, the whole point of this is to be diversified, but we really like this. It's a tier one asset in our opinion.
Yeah.
And so to get an asset like that, you do have to play in that ballpark. And so, by bringing in Sprott, they ended up paying proportionally, a higher part of the overall cost, put up 100% of the cash. So let us get a deal done as part of that. So they took 75% of that deal. Initially, we got 25%. But we have an option to buy back and get back up to 50% with them. And we have that option basically in August of this year and August of next year. And we're paying pretty much what they paid. It's a 10% markup on what they paid last year, minus the cash flow they actually received from that royalty proportional for this year. So, at the end of the day, it's going to be pretty much if we pay what they paid last year, but it gives us that extra time to go raise the capital, in a more creative fashion and get that deal done. So it was creative. I don't think I've seen any other groups doing that. But it works for us at this stage.
And does that, what kind of income stream does it give you? I mean, does it cover your G&A? Does it give you kind of working capital headroom? Kind of, what are you talking about in kind of annual numbers, round figure?
Yeah, well, we're hoping that it's on 100% basis. Once Trafigura gets over some of the COVID delays of last year and prior, they'll get up to about $2.5 million a year in royalty revenue back to us. So we're going to be watching and seeing what Trafigura does as a group that's come in, much better capitalized, to kind of take over that operation. Historically, Trafigura is not going in and downsizing or minimizing. I think when you look at the importance of that concentrate to that Clarksville smelter as well, it's kind of got a little bit more impetus for them to kind of keep, advancing that, developing that out. At the end of the day, the smelting operations of these trading groups are 10 times more, than the mining side, right? So there is that kind of strategic impetus. But we're expecting to be $2.5 million a year once they have gone back up to full production. And we're expecting this to be producing for a long time to come. They've had intermittent production over a 50-year period. They've only ever really had 5-6 years reserves ahead of them. But these systems, are very large, and they've just basically gone out and drilled, 10 meters out, 20 meters out whenever they need more ore, and they found it so far. And so we're pretty confident that trend's going to continue. It's not too uncommon in the mining space. But we're excited about it. I mean, on a G&A basis, we're a royalty company, right? So our G&A is very low. Our biggest cost is really transactional. While we are doing deals, our legal costs, really that's the biggest cost. If we wanted to button down the hatches, we could, 50% of that royalty would cover our G&A, because we're very, very lean right now.
I noticed it's, in terms of your team structure, it's many advisors and just, I think, 3 employees, the CFO, the company secretary, and you.
Yeah, pretty much. Yeah. We have some back office. We have a very good technical guy, David Gaunt, who I work probably the closest with, on our due diligence and assessing, the various projects. I'm an analyst background. I'm not a geologist.
Is he an analyst as well?
Pardon me?
Is David an ex-analyst?
No. He's a geologist. He's done due diligence on assets for I don't know how many years, but a long time, probably 20 years. And so he actually models out the resources, pulls them into a database. We do a pretty deep dive on due diligence. That might surprise a few people, but we are very careful and definitely take our time. But we're a very small team. Yeah.
I saw on the restated technical report, one of the engineers who worked on it was Martin Raffield.
He did our technical DDA alongside Sprott. He did a fantastic job.
Yeah, he's a pretty solid engineer, isn't he? I've seen his work before. In fact, I've worked with him. He's an impressive guy. Good. So of the $2.5 million, you get a quarter of that until if you decide to
execute the option to increase back to 50%. Yeah.
And is it more likely that would be in the future? That would be next August rather than this August?
Well, we're looking at it. I mean, the cool thing is we have some optionality to it, right? And so we're going to wait and see up until the last couple of months. I think zinc prices are definitely a positive in that direction. It'll be interesting really to see where Trafigura goes with it. Because Nearstar had basically no money. I mean, they went bankrupt, at the end of the day. So this operation, it probably was a little bit underloved in terms of capital investment, definitely on the exploration side. And so, I think it'll be exciting to see what happens over the next few months before we make that decision. But it'll be ultimately where we're at. I mean, we do have that option that we can do that next year. So if it's accretive for us to go do it, based on our valuation, I can see us doing it this year. But we got a few months to sort it out. So
when you say sort it out, is that because you need to have better understanding of the resources and the mine life ahead of it? I don't know anything about the asset. So is it at the point where it needs capital to ensure that it continues to thrive and survive?
Yeah, well, it's going to need a little bit of capital. I think, there's some boons to that, like Nearstar's operations in Europe that they had. Several of those have been shut down due to energy issues and such. And so these are really kind of probably one of the better pieces of that operation now that they have it over Trafigura. So yeah, part of it is just waiting to see what Trafigura does. Part of it is the fact is we have that option value. We don't have to make a decision today. And so we're just going to keep, taking all the inputs we can from, Trafigura investing in the project, moving it forward, any announcements that they make on that front. But also, seeing continually where prices go over the next few months, just taking that in because we have that ability to, wait and see.
Yeah, absolutely. Good. Now you've done 17 other royalty deals. Now I'm not going to be able to get my head around all of them, but could you perhaps just kind of give me a couple of salient ones, which kind of stand out to you, which you think are kind of real potential drivers of your equity value?
Yeah, well, I think the Graphmata royalty that we picked up last year via Vox Royalties, I think that one is going to be interesting to watch this year. They were in production for 30 months continuously, right before COVID restrictions in the country of Madagascar shut them down. And, they're one of 2 ASX groups, last I checked, actually capable of producing graphite. That's the funny thing. A lot of these metals, there's a lot of groups out there, very few that are actually capable of production. And they did 30 months. They had all of their product qualified with off-takers. None of it was sent back. They've been doing some extra testing on that, but that's a big step. If you think about the copper space, for example, those concentrates, are pretty saleable, right? There's not, there are a couple of things you got to have to look out for, but in the graphite space, you kind of do have to go through that period of 30 months, send all your product out, make sure it fits their specific requirements, and then you ultimately have long-term buyers. And so they've done that. And their plan, they announced about a month and a half ago, 2 months ago now, that they plan to bring that back onto production this year. And they've been working on upgrading the resources, doing a scoping study on an expanded case. And if you haven't looked at too many of these, it's pretty cool. For a very modest CapEx, you can usually double the production capacity. And so that's what these guys are looking to do this year. Now they're going to need a little bit of money, and they're going to need some of the storms and stuff in Madagascar to die down for sure. But, they're planning to bring that back into production this year. I think they've got a very good shot at doing it. And we'd be looking at about 1 million US, thereabouts, in royalty revenue back to us on an annual basis once that gets into production. So that between that one and our Middle Tennessee zinc royalty, then we are kind of cash flow positive, which is a milestone that I don't think too many groups out there would hit. Beyond that one, we have our Oche lithium royalty.
Can we just go back to Madagascar?
Sure. Yeah.
What's the government doing in terms of export licenses? Because I've got a bunch of scars on my back from Madagascar, and I just every time I hear the word Madagascar, it kind of sends shivers down my spine. It's
outside of our kind of usual target jurisdiction, right? We are trying to pick those deposits, North America, Europe, Australia. That could be that domestic source of supply. Now, when you look at each of these metals, or each have kind of space places that are kind of special, right? You think about tin, you think Tasmania, up there in the UK, nickel, Indonesia, cobalt, the DRC, but Madagascar seems to be a pretty special place for graphite. And there's been a lot of capital going into that. If you look at Mick Davies, his Blue Vision, they made a big investment there, over the last kind of 18 months. But yeah, the graphite there is very high quality. It meets the, the flake distribution and size that groups are looking for. And so, yeah, it's just kind of one of those special places. I haven't heard anything, quite frankly, about export controls hindering, any of the graphite producers there or developers yet. So I'm not too sure about that front, but, it does seem to be kind of turning a corner, I would say, in terms of, investment and investment specifically into their graphite sector.
And the shutdown, was it COVID related, or was it the project?
COVID related, yeah. So Madagascar, as a lot of countries did, impose some pretty harsh, I guess you could say, restrictions, which make it very tough to operate a mine. As you can imagine, just like our office spaces here in Vancouver have been empty over the last kind of 24 months. it's difficult environment to operate a mine in. So basically, they took that time off. They did some work on the exploration. Did some further kind of work on the met side. So testing for products that they could further upgrade to. And so they utilized the time as efficiently as they could. So we'll be keen though for them to get back into production here over the next kind of 12 months.
Yeah, of course. And if they had Australian management, then they weren't allowed out of West Australia or
they're probably locked down. Yeah, exactly.
Properly locked down. Right. So sorry, I interrupted you. You were just about to talk about the lithium side of things.
Yeah. So our lithium royalty, OCE lithium royalty, will probably be the next one in our current portfolio to enter production. It's operated by Sayona Mining. They're a very large company. I think they're about 800 million market cap today.
Yeah, absolutely.
When we first acquired that royalty, they were about a 6 million market cap. So, just tell you the kind of growth that they've seen. They just closed on the acquisition of the Canada Lithium Mine, which is the only really producing lithium mine in Canada. And essentially, the OCE project sits right next door. And so the plan is to actually blend ore from the OCE project to ramp up production at that mine. And so they're kind of looking at doing production from that in 2023, early 2023. And they're going to be releasing the results of a scoping study on that, basically integrating OCE ore to ramp up production of the mine very shortly. It should come out in the next kind of few weeks, actually. So
the Sayona stock was suspended today on the 28th of February.
Was it?
Yeah.
Okay. So that would probably be it.
I went in. It's a pending a resource announcement. So
Well, they're very busy. I mean, they've been very active trying to build out this lithium hub in Quebec there. And so, I know that they said end of February. That's why I said the next few weeks. But timing is everything.
Yeah, their price performance is extraordinary. At the end of 2020, they were trading at 0.006 cents.
Yeah.
And then they
came out of nowhere.
11. Yeah, I mean, they're more than 10 times, and that's down 30% or 40% from the highs. Yeah.
No, it's absolutely crazy what's happened. I mean, look, our portfolio is pretty heavy lithium right now. Lithium prices were up 400% last year. There's a lot of these companies that were, $5, $10, $20 million companies that we talked to. Lake Resources, we talked to them about, probably 12, 18 months ago. They were a 20 million market cap. Now they're $1 billion company. There's quite a few of those out there that have, just seen this incredible growth profile. I mean, it's an exciting time in this space. It's an entirely new market in terms of what people think about traditionally for the mining space. I think it's long term, so it's a pretty exciting time. But that OCE lithium royalty, we're excited about that one. That would bring us our first lithium royalty cash flow. And in the near term as well. So
let's drill down into OCE a little bit. What stage is the resource?
Yeah, so it's a DFS, so definitive feasibility study was completed and updated over the last couple of years. It's really about permitting is kind of where they're stuck at this point. The frustrating thing as a Canadian company is I can't put DFS and show those numbers in our presentation. Or even on our press releases because they don't have a NI 43-101, part of the crux of being a public company, but they do have a definitive feasibility study on that project. It was updated in 2019, I believe. So it's recent, and the economics are, easily seen on their website. I think the MPV back then was about 120 million, but they were using pricing that was a fraction of where it is today. In reality, probably about a third. So it's there's a lot of these projects. We've taken a bet in terms of going hard rock, spodumene, Eastern Canada, because it's a relatively proven technology, relatively kind of simple processing. And we like the prospects for permitting over there, especially in Quebec. These projects, I mean, they're very economical.
So I had a look at the OCE DFS on the Sayona Mining website, and I did notice that it was 2019, and that's kind of the metal price has obviously gone way north, way north of those figures, which is going to be great. Yes, there's inflation. Yes, there'll be price increases, which will eat away your margin at a bit, but the inflation costs are nothing compared to the metal price changes. So that's all positive. What I didn't understand, or what I couldn't see very easily, was the timetable and where they are and whether in the decision-making process. I couldn't extract where it sat relative to the kind of the central hub, kind of North American Lithium, and kind of how that all worked together. So I don't know if you've got any commentary about how the scheduling is going and where it fits with the timetable, where the capital, if they've got capital, where is it first going to be deployed? Where is it second going to be deployed? You know, just some bit of color, please, on that.
Yeah, sure. So it's really about the permitting, I think. Now they are going to be, and you said they were halted this morning, so that could have been the news, but they are going to be releasing a kind of more detailed engineering study on just exactly how they incorporate OCHE and the ore to ramp up production at the mine. I mean, it's funny how things change. I mean, initially, when they were first bidding on acquiring that mine, you know, essentially that mine, the Canada Lithium mine, was not working out, partially because of the ore body that they had there. And so you kind of needed more ore. And these guys had the only project, you know, really in town right next to it. So, you know, it was always going to be kind of critical, you know, initially. Now, where lithium prices have gone over this last year, you know, you could probably start production up at that mine and you know, maybe make a better go of it. Lithium prices are up 400%, you know, so, but ultimately, this OCHE project is going to be kind of critical to the ramp up at the mine, at least in the near term, and that will be their focus. That's been their stated focus, you know, pretty much since the beginning. So you're going to get more details on that, probably even the next week here, or even today, you know, if they're releasing that today, in terms of the actual engineering plans and design. But I know that the timing is really on permitting. So, you know, they were hoping to kind of have that out of the way this year. And we're initially kind of targeting early 2023, you know, potentially for production from OCHE.
And could it, I mean, just the way that these things could be configured, they might be able to restart the old mine while they're doing the permits for OCHE. So, yeah. You know, that could be a kind of a simpler route back into production. And then, I mean, is it First Nations? Is it water? Is it environmental? You know, what are they?
Well, it's, I think there is probably some First Nations involved with it. I haven't done a super deep dive on the permitting, but it's, you know, definitely always a part of it. I haven't seen any issues around water. So, you know, I think we're pretty clear on that. But it's just you know, permitting is a process. And, you know, as great a place as Canada is, you know, permitting, it can be a nightmare sometimes, you know, and so it's good that we're, you know, we make sure that everything is done properly, but it just takes time. You can't speed up permitting, you know.
You can't speed up permitting. And I know all about that. A lifetime in exploration geology. You can't speed up permitting. Well, if you can, there's normally something wrong. But yeah, no, to do a job properly, it takes time.
But there hasn't been any issues like you've had down in the States, you know, with Thacker Pass or you know, some of those big lithium projects in Nevada there. There hasn't been any issues like that, so we're not expecting you know, anything to kind of come up. Quebec is a great place, you know. If you had to choose between within Canada, I think Quebec's a great jurisdiction. You know,
yeah, I totally agree. And deep energy and
lots of hydropower. Yeah, exactly.
Yeah, no, good story. Right, so we've probably got time for another one or two royalties. Kind of, this is like a kind of a magical mystery tour. What's coming next?
Yeah, sure. So I'd say probably Bissett Creek's probably our next most advanced royalty. It's pretty much construction stage. You know, they need an offtake agreement and project financing, and they'd be off to the races. That company, Northern Graphite, has actually just closed an acquisition to become the largest graphite producer outside of China. And that's big for a couple of reasons. It was always a kind of an old boys club, right? The graphite space and the offtake space. It was very, very controlled by, you know, kind of a few groups out there. And so they've acquired this operating business from Imerys. And as part of that, they've gotten all of the offtake contracts, all of the, you know, relationships that they've built up in that space over the last, you know, kind of 10 years. And so their plan is to really leverage that new base and production and cash flow to put Bissett Creek into production. So I think that gives it, you know, definitely a strong kind of, you know, win for it. And so, you know, we could see offtake announcement this year and project financing this year. It's about an 18-month construction time. There we're expecting our current royalty to pay off about $1 million a year US annually. They have about 70 years resources, so it'll be definitely a long life operation. But we also have the option actually to increase that royalty by 50%. And we can actually execute that option by paying partially in shares of electric royalties. So we're pretty excited about that. Yeah, go back. Yeah, for sure.
Bissett Creek is where? It's
in Ontario. It's about 15 hours distance from the largest gigafactory coming up under construction in the US. It's a relatively simple project. CapEx is pretty manageable, around 120 million. It's got a low strip ratio, very good flake, jumbo flake, very large, on the higher end. That project's been sitting there for a number of years, but I think now is definitely the time. And they have the right group there to take it forward.
And who's operating it?
Northern Graphite.
Northern Graphite. My concern about graphite companies always has been the product and the commercial and the offtake. So it's music to my ears to hear that they've bought them the marketing department or the kind of the graphite division of Imerys.
Yeah, well, that's the big thing. It is graphite. It is all about the offtake, and you can't get debt financing unless you have offtake, which means you're not putting that mine into production. That's going to be in a way for shareholders. So yeah, no, I think it's a transformational deal for them, and we're always excited to see our operators having success and getting bigger, because that means they have more capability to help grow assets.
What's the market capitalization of Northern Graphite?
I believe it's around 60, 70 million, somewhere in there. But they have been in the middle of financing, so that could be a little bit different at this point. They just closed this transformational acquisition. They're just working on the final pieces of it. They have a $50 million package from Sprott as part of that acquisition. So, but yeah, we're excited. I mean, they would like to leverage that, as I said, that base that they built to really build out, Bissett Creek as a new flagship.
So that'll be their flagship. So that'll be their most advanced project, and that'll be the one that they'll want to do project finance on, get the offtake on, and build.
Yeah.
Okay. So there you go. Well, how exciting. That's probably enough for now, isn't it? Unless you've got another banger you're going to suddenly drop in there.
Well, we have a couple in our portfolio, honestly, but I'll go for one more. Our manganese royalty, Battery Hill royalty, they're expecting the PEA out here in the next month or so. That I think what is so cool about these projects is that they're very economical. If you look at there's only a few of these developers out there. Battery Hill is the only manganese district really in North America being developed for the EV space, all of North America. And there's only a few of these projects out there. There's a group in Botswana, there's a group in Europe, but it's more of a kind of tailings retreatment. There's a group in Australia, but not very many of these assets out there where it does look like manganese deposit amenable for the EV space. But Guyane in Botswana, they had a 450 million NPV off a 1 million ton resource, right? The guys at Battery Hill, Manganese X, they've got about 60 million tons. And so, it's going to be exciting. I mean, we're expecting that royalty is going to look something like it pays 5 to 6 million US a year annually. Looking at something like a 35 to 40 year mine life. And I don't think the market realizes that, quite frankly, just yet, but super economical deposit. The PEA should be very exciting. That's going to be out very soon. Now, PEA might sound like it's early stage. The metallurgy, which is always the most complicated piece of this, especially when you're talking about battery metal space, they've been working with Cameco on this for 3 years. So I would basically call the metallurgy done. At this point, they've just done their third final testing. They've proved out the recoveries. They've got a very good process put together from an ESG perspective. So the metallurgy is much more advanced. So I would not be surprised to see this fast-tracked to feasibility much quicker than people would think. But we're very excited about that one. I mean, that's a company maker. Once in production, it's got that long mine life. It's kind of one of a kind, right? So that'll be very exciting.
Who's the operator of Battery Hill?
Manganese X.
Manganese X. And what's their market cap?
They were as high as about 100 million earlier this year, but they've been beaten down. I think they're around 35, 40 million. They're definitely undervalued relative to the other, few peers that they have out there in the space. But part of that's getting the economics up. The Australian groups, they're good at marketing, getting that out. The guys in Ghana did a pretty good job at that as well. So I think people are going to be blown away when they see just the economics on this project, and realize really what is there, because it's not very apparent, I think, to most people right now.
And it's grade okay. I mean, the 60 million tons sounds okay.
Yeah, no, the grade's just fine. I mean, and they don't have any of the impurities really that you don't want to see. And it's a bit lower grade than the guys in Botswana, but it's much bigger. So you got much better economies of scale. Okay,
well, I didn't, when I was looking at your list of royalties, I didn't get down as far as that one, so I'll have to go and do some rootling around. But
that's the thing about having 18 assets. It does take people a little while to kind of realize everything that we have. But we've got a couple more lithium assets that, quite frankly, are going to look just like Oche. We're expecting that those will probably have economics come out this year. 40 million was raised to invest just in Seymour Lake and Arkansas royalties November 2021. So just very end of last year. So those are actively moving forward as well. We have people working and drilling on our nickel asset, our copper asset in Australia. There's a drill program on our Chubb lithium asset in and around that Canadian lithium mine. So we got lots of catalysts coming across the board this year. We're excited for people to wake up and realize what we have here.
If you have a 1% royalty on a project, what do you translate that to in an equity stake? Because I'll give you the floor.
Well, okay, well that's a good question, because we look at it just from the point of view of argument in terms of valuation, right? Back to a company. It's tough, right? Because a royalty, especially in the jurisdictions where we're targeting, where we can actually tie that to the project. So that means it costs us nothing to hold it, right? So it's kind of for a long time, zero cost. And we actually are, if the owner loses the project, they take on debt at the wrong time, our royalty is actually going to survive because we can actually tie it to the project. So it's got some, added benefits to it that are a little bit more, difficult to kind of translate. The other cool thing about royalties, right, is if you think about all the equity investors that have ever gone into the mining space, how few companies actually pay out cash flow back to them, right? So they've never really had that access to actually have the cash flow, whereas a royalty is exactly that. So it's a little bit different on the rights, right? Especially around cash flow, but it's a good question. Ultimately a project, let's say in the traditionally could only ever fit maybe a 3, 4, 5% royalty. So you have to also kind of take that into account, but I don't know, 1% for 10%, if I had to ballpark it, something like that, would probably be, kind of a rough starting place, but it would depend really on each circumstance, as you go. It's a good question though.
That's interesting, because if you, I've seen, in fact, there's a retail investor from Crux who has done some analysis on that, and his figures are 1% to 13%. If you look at the margins of the resources sector over time,
that's a pretty good ballpark then. Yeah. No, that's interesting to know. I appreciate that.
Good. Well, I mean, it's interesting that your instinctive feel is kind of 1% is 10% of the project. That's interesting in itself, because I was brought up on the old rule of thumb that 1% is 3%. 1% royalty is 3% of the equity, but I've seen that time and time again. It's much more valuable than that.
Yeah. Like I said, there's those different rights, right, where you do have a right directly to the cash flow, where you can actually tie that to the project. And there are no holding costs. That's the great part about it. Continual appreciation just grows. When we have people investing all this money in our assets, it costs us nothing, right? We're not doing the development costs. We're not doing the capital costs. There's no risk there for us. We're not even spending our time, on it really, right? So it's just an incredible kind of, growth as you move forward. Like I said, that 10% equity stake, those guys are going to be diluted at all those points, right? As they move along the project as well. Down to such a point where there probably is 1% to 3% by the end. You'd have to talk about equity when they're finished raising the money, or through the development stage. I think would be interesting to talk about too.
Yeah. No, absolutely. Great. Well, thank you so much for your time. I understand the company much better, and I'm going to have to go down and rootle around the remaining 13 or so projects that I didn't cover.
No, I appreciate it, Merlin. It was a pleasure to meet you today. And I'm sure we'll have another conversation here in the near future.
Yeah, great. I look forward to it. Thanks for your time.
Awesome. Cheers.